In other words, when price open, we had this word consolidation, which is accumulation. Price consolidating for the new day, the new intra-market, price consolidated. Now, we see our price consolidated that day. This is our Sunday open, and this is the end of that day. So this was where price open, and this is the end of that day. Price consolidated. Now, after every consolidation, we tend to see what? Manipulation. You wait for the manipulation. Usually, manipulation could be between 10 to 20 pips. That's your turtle soup sell or buy model. Now we have the manipulation here. 20 pip manipulation, right? The price manipulated above the Sunday open price. The price manipulated above the Sunday open price. You have to wait for the manipulation. You have to wait for the word manipulation. When price manipulated above Sunday open price, it's break down below. We have price manipulating above Sunday open price into this institutional zone here where we have this block. So you have to look for an institutional zone that price, I don't want to call it institutional, look for an other block that price might likely what trade into. When price traded into that zone, 20 pip above the consolidation. Know your consolidation. What did I say? Know your consolidation range. Spot the range. Know your consolidation. When price got there, it created this other block. I don't want to cover the other block so you guys can see properly. It created what? Break above. Can you see that? This supply zone was taken out. Asian high was swept, 20 pip above Asian high. Then we have our turtle soup. It created this zone. Now, listen very carefully. You don't need to wait for price to chase price. When you created that zone, right? When you created that zone, we see how price traded down. Now, it hasn't given you an entry. It traded down. But when price was trading down, this bullish order block here, demand zone, first of all, watch out. Pay close attention most time. You don't need to always wait. Don't need to always looking for the overall picture. Now you look at that, we have this word, bullish order block. Now it was, price did not reluctantly trade below it. You see this drop, price dropped below it. Price dropped below it in a kind of like, okay, we have like a momentum, this sell right here. And we have the word, a shift in what? Market structure. Right? We have a market structure shift at that spot right there. Price drop down. Now you have not gotten your entry yet because price has traded above, hit this institutional zone. Now you have not gotten your entry. You just see that price traded below this bullish order block. Price traded below what? This bullish order block. Now when price did that, this is a zone that started this bullish movement up. And we can now see that price closed below that zone, showing us a confirmation. You can see there's a close of body candle right there. But I am specifically looking at this zone. It closed below this zone. There's a close of body candle right there, right? But I'm specifically using this as a shift instruction. Now, when price traded down, we see that this candle actually facilitated this whole move to the downside. Asian did this range. London traded to that swing high, throwing people off. Now, New York, price traded down in London session and closed below this low. Closed below this low. What are you going to be looking at for this zone? That candle that actually facilitates the move to the downside. Now, what's the best thing for you to do? You can look to take your entry at the 50%. Why am I saying at the 50%? Because it looks like the body candle is smaller than the what?
Weak.
The body candle is smaller than the week. So you might want to allow price trade into 50% of the zone. Now you put your candle, look for the mean threshold. Where will be your stop loss? Your stop loss will be maybe 2 pip or 3 pip above that zone, above the high of that candle. So you decide to take your trade at that spot. Now look at your stop loss from this 50%, and you put your stop loss 2 or 3 pip above, right? So your stop loss is just use 10 pip stop. It's fair enough, right? 10 pip stop. Then where will be your target? You take from the 50 pip down as price return back. What will be your target? You target this previous low. I don't know if you're getting me. You target this previous low. And by targeting that previous low, what would you have made? You would have seamlessly made 50% for the day just by using the open price concept. Now, trade below the Sunday open price, trade above turtle soup, and what happened? Price traded below. Now, when price traded below into that zone, you have taken your TP'd. It went further to confirm a break of structure again. What happened? It gave another entry. I hope every one of you can see the break of structure.
Yes, ma'am.
My first take profit. Now, assume did not take that first trade. You decide to take this trade, which is a more further confirmation. You've seen a break of structure. Just by using the open price, as what will happen? Price came back directly again. You're going to take your entry where? At this fair value gap. Here will be your TP. The low price has created.
Yes, below.
You would have made 60 pips seamlessly. Now, what happened? It traded back into that low. Are you seeing it? It went up. Went up, right? After a break of structure. Break of this structure gave a confirmation, a break of all this structure to the downside. Can you see that? A break of structure traded back into the fair value gap. After trading into the fair value, all you just need to do, take your entry at this fair value gap. There will be your stop loss. Your stop loss can be at the what? From the entry of the fair value gap to the top of the candle carrying the fair value gap. You would have had a 13 pip stop loss and seamlessly made 70 pip take profit. You see how price just rejected and traded back down into that low. You'd have been out in profit.
Yes, ma'am.
That's trading what? The open price concept. Now, this is Sunday open price. Price traded down and created the low of the week, right? Traded down, rather not created low, traded down above, below Sunday open price. Now, it has given us a high right here, this entry right here, and use this place as an inducement. Now, when price decided to trade down and we took profit at this low, looking to your left, you see this candle was actually what broke this high. This candle was actually what facilitated the break of this high. Now, when price traded down below that zone, remember your sponsored candle and your what? Secondary point of interest and primary point of interest. Now, our primary point of interest is our sponsor candle. Don't forget that. While our secondary point of interest is our what? Our breakers. Now, you see the way price did not get to the sponsor candle. It traded into the breaker. This is our sponsor candle. Remember I said if price is coming, you might use the breaker first, then later use that high as inducement. Remember I thought that when I was teaching breakers. Now price traded back into the breaker, thereby inducing all these highs that he was giving people as entry for sale. What happened? He traded back that zone and cleared the whole of this low, giving over many people. Just imagine you're taking profit at this low that it has created from this breaker. Now your entry is at the beginning of the breaker, stop loss above the high of the breaker. You would have seamlessly made another what? 100 and something people take profit. Now, how would you have on Tuesday? This was Tuesday. Look at Tuesday. Look at the intraday right here. Where is midnight open for Tuesday? This is the midnight open for Tuesday. I don't know if you guys are following. Hope everyone is following, right?
Yes.
Yes, ma'am. Yes, ma'am.
Okay, good. Now, this just for you to know how to trade into this breaker block, to have gotten that entry on that breaker block. I see you would have seamlessly made 170 pip just by using breaker. Just by what? Using what? The breaker, not the sponsor candle. This is our secondary point of interest. We still have our what? Primary point of interest. Now, I used USD card the other time I explained midnight open. I just wanted to use GBP USD so you know that it works. Now, when the day start, this is our true day, right? This is our true day, which is our true day open Asian session. Now, we have our midnight open price right here. Where is your accumulation? You see our accumulation. That's the Asian range. Your Asian range is your what? Your accumulation gives you the tone of the day. So you see how Asian session just ranged and was buying, right? This is our true day. Asian session, from the previous day Asian session, price just bought up. What happened? You look for price to trade below Asian session, thereby giving you your low for the day or your Judas swing low. Now, price traded below Asian session, did that many p, 50 something p. Me, I wouldn't have taken that trade because it was just more of what? Ranging. More of what? Ranging. I would have waited for price to break above the Asian session. Now, price broke above the Asian session after trading. Now, remember when I was teaching about liquidity, I said when price take buy side liquidity, what would they go for? Sell side. When price takes sell side liquidity, what would they go for next? Buy side. Now, you
Buy
see
side.
Swept sell side liquidity. The market maker sell model was what? Completed. Now, what's the next phase? They will raid the highs. From the Asian low, right? This is our accumulation range. Now, from the Asian low, they traded 30-something pip, 50-something pip below. They traded 50-something pip below from our Asian range. But now I would not have taken that trade because except if I'm seeing 5 minutes push, the way I'm seeing this 5 minute push, okay, I would have said, okay, down, price is failing to break a low, it's giving me an up move. But for someone that is still learning, you wait now, price took out sell side and they claim this buy side. You see how they claim the buy side? You just wait for a clearer path because sometimes price may do a lot of trickish behavior just to throw people off. So if it's not clear to you, don't engage. You don't have to prove anything to anybody. Now, they broke above this high. Can you see a break of structure? Oh, yes, I can see it. That's this high. Accumulation, right, like this. Above accumulation like this. We have our open price, manipulation below the open price. Can you see that? Now, around the open price, you can see this accumulation, right? This bearish form inside the open price after price traded below. This is giving us, and price closed above this bearish candle. What happened? Price just returned back to that bearish candle. See it. See this bearish candle, price created this bullish order block, traded down into a bullish order block, closed inside. Now we see some subsequent bullish candle trading and closed above this bearish candle. What happened? It traded back down into just below the candle that owns the fair value gap. Where's your TP? You'll be looking at what's sweeping the whole of this word trend line liquidity, and you're trading back into this word
breaker block.
This high right here. So if you are traded back into this, I would have cut this, return to other block and take profit at this high. Take profit at what? This high. Now you are area of interest 1, this other zone, area of interest 2. Can you see that?
Yes, ma'am.
That was on Tuesday. And you TP just way below. You can TP at this low. That's for Tuesday. Tuesday is out. Now, Wednesday. This is Wednesday. So what? Same man. Who was that? You have a question or you want to say something? Okay, let me continue. Now, this is Wednesday. Wednesday, we see our price made a range structure all through the Asian range. So that day we have price making range structure all through the Asian range. Right? We see our price was what? Doing this range structure. Just by using this midnight open price concept, we have our true day open right here. We have our true day open price right there. Price traded and took out previous day low. See that? Took out previous day low. And from the previous day low, what's the price do? How many pip price took? This is previous day low. Target between 10 to 50. Price took 30 pip. You even did more than 10 to 20 pip. Usually I wait for 10 to 20 pip stop loss. Rate below previous day low. So it took 30 pip below previous day low. Created this range structure, and we have a break above the range structure, which is tend to be our what? Accumulation. Where is our accumulation? Around the open price. During the Asian range, we see our price was just trading and engineering liquidity on both buy and sell side. Now we see price broke above. What happened? Price broke above. Then what is in our mind? We wait for price to give you a return to order block. Where we have our open price right there. You have your breaker. You also have in line with your order block. Now, price is not fully deep down into, but you just tap on. You see how price broke structure above this range, our range structure. Price broke above the range structure and returned back down into this breaker, this bullish candle right here. Just tap on it, very clean, very, very clean. Our accumulation, right? Manipulation below open price. And we see how prices trade above. After a break of structure, return to the order block. Where will be your TP? If you are holding, you can decide to TP at this what? Can decide to TP at that imbalance, because you don't know if price will decide to take that high or price might just leave that high for now. Remember, this our what? Our breaker entry becomes inducement for our sponsored candle. So now we have price trade back there. You just enter at the fair value gap